In a world where rates could not be non-zero, which they are now, the more important thing is to understand the technical trend. And you have had governments spending trillions of dollars to create these two boundary conditions for you. You need to understand them and take advantage of it. You will make trillions distributed across all of you. That is where to spend your time. That is where I will spend my time. That is what my spidey senses tell me is the greatest opportunity of my investing career. And I've never felt this way before. I didn't even feel this way about Bitcoin. You know, and I was the guy that owned 5% of these things in 2011. My dollar cost average was like $90 or $100. Even when I knew that that was going to win, I'm telling you that that is going to pale in comparison to this.
Hey guys, welcome back to Library of Wealth. Today we have Chamath Palihapitiya discussing the importance of understanding technical trends, his investments in technology companies, and paying attention to market positioning in a world where zero interest rates are now crippling the economy. The billionaire investor says that investing in technology companies can lead to trillions in profits that will be distributed to everyone. He believes that technology companies have become the winners in the economy because they embrace capitalism. Chamath says by using technology to build a business, it's impossible not to make money. Let's get right to the latest interview as Chamath gives us his investment thesis that he says is bigger than Bitcoin in 2011. Don't forget to hit the like button and subscribe to the channel if you enjoy the content we do here. Let's get right into the video.
The biggest thing that's happened in the world today that has caused all of this upheaval that you see has been central banks moving to zero interest rates. Let me just explain this for a moment. If you looked back in the world in the 60s and 70s and 80s, you had incredible coordination. So if there was a big problem, even starting in World War II actually, you had huge problems. You had to invent incredible technologies. There was this cooperation, and it was largely led by governments first. And then all of these other organizations would fall out from beneath it. But that was in a world where the economy was basically one where there were checks and balances, and capitalism was allowed to play itself out. Right? There were winners and there were losers, and we did not shy away from it because that was politically incorrect. Today, that's not true. You are not allowed to have losers. Everybody has to be a winner. Everybody gets to touch the soccer ball. Everybody gets to score a goal. No company should ever go out of business. Every theoretical sector of the economy could be subject to a bailout. And all of that was made possible because when we broke the glass in 2008, in this great financial crisis, we took rates to zero, and instead of taking it back, we abandoned it. And so we stopped cooperating. But what's interesting about that is that that was the same time that technology companies just completely transcended every other company. Because it was a thing where you could still have truth. You cannot hide from the fact that Tesla is a better car. You cannot hide from what an iPhone is. Does anybody know the difference between airline A versus airline B? I'm sure you could give me a very complicated balance sheet example, but there are no differences. Pick a CPG company, pick an insurance company, pick a bank. These are all sort of like monolithically the same. Tech companies are not. They are unique. Every single one is unique. Some are winners, some are losers, and it's very clear where the winners are and where the losers are. So what I would basically say is nonprofits and government used to be a very productive way of moving things forward. It doesn't work today in a world of at or near zero rates, or in this world today, the hangover of that. You have to go work in a technology company and you have to use technology to build a business because there is no problem that you cannot solve that technology won't be the leading edge of the sword. And by doing it, it's impossible to not make money. I dare you to find a technology business that has improved the world that has not made millionaires and centimillionaires and decamillionaires and billionaires. It's just not possible. So, if you want to be socially progressive and do something interesting, you have to embrace capitalism and you have to embrace technology and you have to do something.
Chamath goes on to discuss the impact of central banks moving to zero interest rates on the world's economy. He notes that there was more cooperation and coordination between governments and organizations in the past, allowing for capitalism to play out and winners and losers to emerge. However, today's economy does not allow for losers, with every sector potentially subject to a bailout.
If you want to really figure it out, I'll give you two big trails of breadcrumbs that you should follow. And I've said this now a little bit redundantly, but I'll just keep saying it because it is the most important thing in the next 25 years. So I don't care what you like or don't like. You need to pivot your career to one of these two things. if you want to be successful. Number one is that the marginal cost of energy generation is going to zero, okay? You have wars, you have death, you have all kinds of geopolitics that pivot around natural resources and energy. What happens to a peace dividend in the world when you don't have to fight for that stuff because you have abundant energy? And the cost of making that energy is effectively zero, and it has no impact into the ecology of the world. Well, we're about to find that out. And when you take the cost of energy to zero, now it unlocks all kinds of other problems that before were impossible to tackle because it would be too expensive. So that's trend number one. Trend number two is that we have shifted the ability to calculate and solve any computational problem away from a CPU to these things called GPUs and ASICs and FPGAs. That's all fancy language for things are getting easier and easier to solve. There's a company in Silicon Valley called OpenAI. You may have played with their tools called Wall-E or GPT-3, or DALL-E, sorry, and GPT-3. What are these things? These things are massive leaps in AI. Okay, these are models where you can type in something like Wharton class of geniuses in the Renaissance style. Those are just words, and they'll translate it into an image. It's incredible, incredible technology, okay? Or GPT-3, where you can have a language model now where it can auto-write a book, and you will not know that it was not a human. Think of the market as a train, and sometimes the train is going up a hill, sometimes the train is going down a hill, and sometimes the train is going off of a cliff. But it's important to observe how the boxcars are arranged. The boxcar at the front are these computer trading algos, okay? And those algos really dictate the early momentum and shape of markets and vol and how things move. Then the next are the hard money long onlys and hedge funds, like us humans that are running money. And then at the back of the train is retail. And I'm just kind of like giving you the three basics, high-level summary. And if you look over and over repeatedly over time, if you follow CTAs and then you follow the positioning of hedge funds, you can sort of see where markets go. And if you take that set of information and you marry it, so you do a join with where the volatility index is, you get a decent directional sense of what's going to happen. Again, this is not advice. This is just like go and do this research for yourself.
Chamath argues that the marginal cost of energy generation is going to zero, which will have significant geopolitical implications. He suggests that individuals should consider pivoting their careers towards these areas as well. He presents his observations about the market and how it operates, describing it as a train that can go up or down a hill, or even off a cliff. He notes that the computer trading algorithms are at the front of the train and dictate the early momentum of the market. This is followed by the hard money long-only hedge funds, run by humans, with retail investors at the back of the train. Overall, Chamath suggests that by positioning these entities over time and combining this information with the volatility index, one can gain a decent directional sense of what will happen in the market. What do you think about Chamath's economic outlook for this year? Will affect the stock, crypto, and housing markets in 2023? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.